Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hello, everyone, and thanks for coming back to another episode of the Investor Financing Podcast. Today, we have a very good guest that we can pick his brain for the next 30 minutes or so, all about business funding. I get a lot of questions about unsecured business loans and what actually is true, what's out there for people starting a business, for people with existing business, how to really build business credit. And when I was thinking about this show, and I was thinking about who to get on this show, I thought about Leo right off the bat because he is the man to talk about. Leo Kanell from Seven Figures Funding, and we're going to take a deep dive into all things business funding. If you want to just do a quick intro about yourself and introduce yourself to the listeners, please.
Sounds great. Yeah, I appreciate that, Beau. So I've been in the finance industry going all the way back to 2003. So I'm starting to get old, but definitely been in it a long time and done all sorts of financing from commercial real estate financing to residential home mortgage financing. That's kind of how I got started in the mid 2000s and rode that wave, and then started to get involved a little bit more with corporate credit and more traditional business loan options, SBA loans, all of that type of thing. And over the past 5 to 6 years, I started to see a trend where there was a lot of people that needed additional unsecured funding, where maybe you had, the conventional mortgage or you had the loan for your equipment, but you didn't have extra money for rehab, for refurbish, for down payments. You didn't have extra money to actually launch a brand new startup business because all the banks wanted you to have collateral and 2 years of tax returns. And so we started to figure out all of the different options for loans and lines of credit and business credit cards in which you don't have to have collateral and you don't have to have those profitable business tax returns, which really only about 20% of businesses have anyway. And that led us to create a lot of different financing options. And when we started to launch, my thing was there had to be a guarantee, because there's too many lenders where you go and you just get what's best for them, not necessarily what's best for you as a client. And so I wanted to be able to offer what would be the very best guaranteed funding that someone would qualify for and that exists on the marketplace, so I can look them in the eye and say, hey, this is exactly what I would and have done for myself and my own financing needs. And this is for sure the very best funding for you.
So let's just start with somebody that is, let's say, starting a business. They don't have a business right now. They don't have an entity, an LLC or corporation. And they say, listen, I just need some startup capital for my real estate investing business. I've got one deal under my belt. I want to do more deals, but I know I need a little bit of working capital. I've got good credit. And what are my options really, like to get like a line of credit or a term loan? I mean, where are we going to start with somebody like that?
Yeah, great question, Beau. So, you're starting, your brand new real estate investing business, and you're going to need capital and you're going to need some resources. And so, we'll a lot of the times help you with getting an incorporation set up, whether that's an LLC, an S Corp, whatever is going to be best for what you're doing. And the way you're going to qualify for financing is going to be based, significantly on your personal credit to qualify, and personal income that's verifiable will help too. But let's start with just credit by itself. Having a decent credit score, anywhere from, starting at least with a 650 FICO and up, there's a lot of options that you can get just based off of that credit score. You can get revolving lines of credit. You can get business and personal credit cards at 0% interest for 12 to 15 months. And one of the important values that we bring is a lot of people think, oh, well, yeah, I can probably do that on my own. But the knowledge that we've acquired over the years is how to get significant amounts of funding in revolving credit at 0% interest also in the name of your business after we help you get your business entity off the ground and set up, get that LLC set up. And then you can actually get some credit in the name of the business that starts to build that business credit and takes the pressure off of your personal credit. And that way, if you max out that business account, well, it's not pulling your personal credit score down. And then the other thing that's super important is to understand there are cash out systems that we put in place to where you can pull the money off of these accounts, off of a credit card account, and still maintain that 0% interest rate if you need extra money for a down payment, or if you've got to pay a contractor and for whatever reason he or she can't take a card, now you can put that money in the bank, still maintain the 0% interest rate, and get it going. So if you're just starting out, you definitely want to get an entity set up as soon as possible. And you want to make sure your personal credit is where it needs to be to qualify. And a lot of times we'll meet up with an investor who has a bunch of maxed out personal cards. And when your cards are maxed out, it's really tough to qualify for unsecured funding or, that conventional mortgage you might need. And so what we'll do is we'll help them with maybe a loan that they can then use to pay down those card balances. Then their credit score is going to go up 30, 40, 50 points, and now they can qualify for the revolving credit in a second step. And we'll teach them how to move all those balances over to new 0% accounts, save you thousands of dollars a year. And so that's our goal, is to not only provide you the best financing options to start your business, to get it rolling, but to also put your personal finances, your personal financial balance sheet in a better spot than when we found it.
That's great advice, because over the years, as I've done this research and eventually found you, I applied for the personal credit cards. I used a company before I knew you. I wish I would have known you then. I probably got a lot more money or credit rather. And it worked great. Okay. But that's that's phase one, right? And then the thing is that when you borrow against those personal credit cards, right, now your utilization on your credit report you're supposed to keep them under 30% from what I heard. So now my credit report, my score started going down, right? So there's actually like a system, I think, and your company actually walks people through this system where it's like, yes, we're going to start with the personal credit cards, then we move into the business credit cards, right? And then we build up your credit profile, and then eventually you actually get unsecured lines of credit for your business. And then from there too, once you have income coming into your business, right, you now have tax returns you could provide showing I make, I gross $500,000 a year, I net $200,000 a year. Now you're actually able to get SBA type financing and things like that. Can you kind of touch on kind of like the flow of what somebody should expect, like starting out and then walking them through like the ideal kind of business credit package on optimizing and getting the maximum use out of credit?
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
Yeah, you bet, Beau. So at the beginning, maybe you start out and you get a personal, no collateral 5-year loan, and you get some of those personal credit cards at 0% interest with some cash accessibility, and we help you get an entity or an LLC off the ground. And then over maybe the next 6 to 9 months or so, you can start to build the credit of that business. And we've got a business credit platform and a program that you can follow. The thing about business credit that makes it so unique from personal credit is it doesn't automatically report. So you might be working with a supplier who provides, cabinets and countertops for some of your rehab projects, and you have a 30 or 60-day line of credit with them. They might not be reporting your business credit. And so what we've done is we've figured out the vendors who will actually report that business credit history. So you start with that personal credit, get the personal loans, the personal credit cards, lines of credit, and then get the entity set up in the next step. After the entity set up, you start building those small business credit accounts that report to Dun & Bradstreet and Business Experian, which are kind of the two major business credit bureaus. And then as you build that up, then you're looking to establish business credit cards at 0% interest. And in some cases, we can even get those business credit cards going for you really a day after getting your business entity set up. So that can also be done at the beginning. Or if you do wait after building some of your corporate credit with the small vendors, then you will get bigger business credit cards if you follow through with that. And then you're absolutely right. Then you can start to get really strategic, like, okay, my business is making this much, and I'm going to have profits of this much and depreciation and all sorts of different things that I can then add back in. And with those tax returns, now I can get business loans and business lines of credit as well.
That's pretty good. I mean, I think that being a real estate investor, many of us that are listening it really comes down to the accessibility of both private individuals who are going to lend you money and hard money lenders. But the other piece that I've really utilized over the last few years is having the credit cards, having the lines of credit which save your butt over the long term, because something comes up and you're not expecting a $10,000 or $15,000, you have to redo a kitchen or put new floors in or whatever it comes down to. Having that flexibility where I can go charge on my business credit card, I can go charge 20 grand and it's not going to affect my scores because it's not on my personal credit report. It's huge. It's huge. I mean, in the beginning I had to do them and they were on my personal credit report, and I had to take some hits. I'd go from a 720 and my score would go down to a 630, never missing a payment. But I like the whole concept where you actually could coach somebody through the whole, from start to finish, basically, on, because there's a whole checklist, right, to getting your business entity looking correct on paper. Let's say, like, you have to have an address, you have to have a website. There's like a checklist you go through. You have a whole kind of audit that you do on these to develop the business credit. And it's not, you can go out and research this information, but what I found is it's kind of overwhelming. So if you give Leo a call, his company, his people, his internal people, they can walk you through the whole process, because if you do one thing wrong, you might get declined. And that's what I found that out the hard way, right? These credit card companies and these business lending platforms, they have their kind of checks and balances. And if you don't fit in that box, they won't lend to you. And it could be something as stupid as being listed in a business directory.
Absolutely. And the way your business shows up, right? Your SIC code, I mean, there's all these different things. And really what lenders want to see is they want everything to match up. You mentioned the address, the state listing, the IRS setup, the EIN, and that's a lot of the times why it's helpful to work with someone like us who can help get your entity and your EIN and everything matching up properly and set that foundation up, and then follow through with that business credit program. It's kind of like I always say, one of my mentors, who's built $100 million company, teaches that, you want to, instead of trying to figure out how to do everything, figure out who can do it for you. And as you build that team together, where you've got you taking care of their private funding and the mortgages that they need to buy these properties, and then you have us helping out with the corporate credit and the unsecured funding and the lines of credit that they can tap into for those rehab and refurbish and unexpected expenses. And it's just all about putting that team together of professionals who are great at what they do, and then putting them to work for you on your team so that you can get everything done.
So once you kind of develop the first entity and it gets off and running, and you've seasoned it and you've owned it now 2 or 3 years, you can actually go out and replicate the same thing with a different entity. You start a new company and you can raise capital in that. So essentially you could have $200,000 or $300,000 available capital with one company, $200,000 or $300,000 with another company. I mean, it's not going to happen overnight, but I'm just kind of setting the tone that it's out there and people are doing it, correct? I mean, there's people that have 4 or 5 entities that have a couple $100,000 of available credit. So think about what you can do if you use credit and leverage the right way. how powerful it is, especially if you're starting with very little of your own money.
Absolutely. And it's all about relationships, right? In business, the more you're involved in real estate or whatever, it's about the relationships you build. And these lending and financing companies and sources that we work with are no different. The more you can build that relationship with them, and the thing they love to see with revolving accounts is that you can use them and then pay them down and use them and pay them down. What they don't want to see is they don't want to see them tapped out for 9, 12, 15, 18 months at a time, because then they start to get nervous that maybe you'll never be able to pay them down. So it's perfect for real estate projects where you can, put the money into the project, either sell it and get your profits out and pay those lines of credit down, or, after you increase the value of it, then you can always look to refinance it based off of the new evaluation, pull that money out and pay those accounts down. And as you do that, a magical thing starts to happen. Well, you didn't even ask the lender for an increase, and all of a sudden that $10,000 limit just jumped to 20, and then it jumped from 20 to 35. And these things happen as you build those relationships. And some of our clients with just one lender and one entity will have an $80,000, $90,000, $100,000 line of credit with multiple banks and multiple businesses. And it happens, like you said, not all at once. It happens step by step by building that corporate credit score. It happens by building trust and a relationship with the banks and the lenders and the credit unions. And there's all these small regional companies that a lot of people aren't even aware of. And it's kind of about finding out who's hot. It's almost like a professional sports team. Ooh, this team's on fire. Well, that'll happen with certain lenders. We've got a couple lenders right now that are small regional lenders that lend in different states, and they've been giving out to people with, okay credit and really not a lot of business credit, $15,000, $20,000, $25,000 limits just to start out with, and then increasing those substantially. And so it's all about finding, where you can get some of those big accounts and build them up. But then as you build them up, it's because of the relationship, it's because of the corporate credit, and it's because you're responsible and you set them up on auto pay, and just a lot of little things that make a big difference.
And I deal with a lot of investors now with Airbnb, with the growth of Airbnb. A lot of my investors now, and I'm starting to do this too with some of my rentals in the Midwest, is I'm looking at it and going, like, I have one right by Notre Dame College, and
oh wow,
I actually lease it out. I have it leased out to a lady who's running it as an Airbnb because I'm not there. So I said, go ahead. She's paying me a little bit of a premium. But I looked at on this data website, and that property on AirDNA, which gives you data from Airbnb, it says I can gross $100,000 a year off this one property.
Wow.
And so I'm thinking, wow, this is great, because I get a lot of people in some Airbnb groups, and they're always looking at ways to furnish their rentals. They might even be arbitraging the Airbnb, meaning they're leasing it. So they're coming in with very little money. They're leasing the property. Now they need $8,000 to furnish it, right? And maybe they're just starting out. Business credit is awesome for that, right? And we can also touch on, there's equipment leasing, right? You can actually, you can finance the furniture. There's a lot of things you can do that people are unaware of that's available to them. So, that's the purpose of this show, is like, there's so many funding sources. You got to educate yourself. You got to get with the right people to figure out that there are options for you, because if you don't get started, you'll never know, right? Like if you never started your first business right out of the garage, right? And you basically stumbled on this business by figuring out you needed capital like 10 years ago when you started, right? And you're like, wow, I can get these loans. And then you developed a whole business around it and funded hundreds of millions of dollars from an idea, and then from an initial couple credit cards.
Yeah, no, that's absolutely right. I love the Airbnb opportunity, because you're right. It's such a great ROI where you can come in and follow programs, that are out there where you can lock up a few properties, and you just need, like you said, $5,000, $6,000, $7,000, $8,000 to furnish that and have first and last month's rent if you lease it. And and you can really have a great arbitrage system. But it takes that initial money, and boy, you can't beat that 0% interest rate. And in a lot of those opportunities, within 6 to 9 months, you're already into profit, and you already paid off the furniture that you bought that you now own free and clear. And that is exactly what a good business is all about, right? If I can put $1 into something, can I generate $2 or $3 of return? And obviously, if you're getting 0% interest the first year, that's helpful. But even after that, even if you're paying 15% interest, but you're able to turn that money into a 50, 60, 80, 100% return, well, you're winning. And that arbitrage, that difference, that return on a loan or return on a line of credit is what makes it so different from personal debt. And that's the biggest thing I think that we struggle with as new business owners. I know I did, where you're not sure and comfortable, should you take this debt on? And we've been taught to avoid it. It's not good. But then you start to understand, well, business debt is different. Business debt makes me money. When I take out that loan or that line of credit, that credit card, and I go on a vacation, I buy expensive clothes, doesn't make me money, right? But if I can use it for this real estate project and this business or this Airbnb opportunity, and I can do the math and see, even in a worst case scenario, I'm going to have a positive return way more than my cost of capital. If I'm paying 15% on this loan, but I'm making 60% or 100 or 200% over the next year, well, what's 100 minus 15? It's an 85% return that I make because I used borrowing smartly. And that's a big step. And that's why, wealthy investors understand this difference. And that's why they use debt to their benefit. That's why, big time investors will have, debt across the board, but it's all business debt. It's not, worthless personal debt that just isn't going towards a business.
Yeah, no, I mean, that's how I think most real estate investors have to start, right? Like, we find maybe we get our first deal, it's a great deal, but we have no money. What do we have to do? We have to go get a partner, right? Now, the other mindset shift is like, instead of getting that partner and doing a 50-50 split with that partner, I'd rather pay a little extra in credit card payments, right? And not split the profit. Because think about that. You're paying $3,000 extra in interest on the credit cards versus paying somebody 50% of the $100,000 profit. I mean, you got to figure it all out, but it's always good to have multiple sources. You need your private investors for some deals. You need your corporate credit cards. You need your personal credit cards, and you got to put them together. But as long as you're doing things that return value to that, 2x or 3x, that's the name of the game. So as far as strategies on keeping your credit, as you're getting started, keeping your personal credit going because let's say I come to you, I'm a 700 credit score. I've got my highest credit card balance right now. I mean, highest limit is $15,000. I'm solid. I mean, somebody like me, you're going to go in and you're going to run like an analysis and say, okay, based on your personal credit profile, you should qualify for X, right? You have kind of like an algorithm that can basically say, based on your high credit limit, based on the seasoning of your credit, we can probably get you between $50,000 to $80,000 of credit in your personal name within the next 3 weeks. Is that kind of how it's done in a sense?
Yeah, absolutely. We want to get a free pre-approval out to anybody who's looking for financing as quick as possible within 24 hours. And the way we'll often do that is by just getting a snapshot of their credit profile. And so what we did was we actually partnered up with Experian, and we launched a credit company where you can get that report, and it's a soft inquiry, not a hard one, so there's no negative impact, and it's at softpullcredit.com. And so at softpullcredit.com, anybody can get that experience snapshot, the report, their score, their summary, and even there's a score simulator that tells you exactly what to do to increase your score. And so with that snapshot, we can then run it through our system and our marketplace of the thousands of business owners and investors that we've helped with over the years. And we'll come back with a pre-approval exactly, maybe 60 to 80,000, 80 to 100,000, and it'll be multiple options. You might qualify for a $50,000 loan with no prepayment penalty, affordable monthly payment. and you might qualify for another, $60,000 to $80,000 at 0% interest for 12 months on revolving credit. And so we'll get you every option available, and then also explain ways that you can improve your personal balance sheet. And sometimes that's, getting those business credit accounts set up and getting the debt in the name of the business, so it's not weighing down your personal credit. And then educating, everyone as much as possible on credit. And that's what's crazy. Like in our schooling system, there's no credit classes. There's not even credit classes I've ever seen in college. And that's why we also created Credit College, which is a platform that we give out for free for everyone that signs up at Soft Pull Credit, so that they know exactly what it takes. You mentioned utilization of credit cards. That's important. If you can keep your balances at 30% of your limits, your score is going to be higher. If you can at least keep them at 45 to 50%, your score will still be good enough to qualify you for funding. If you can set up automatic payments to pull the minimum payment out every month and not have to log in and make a payment manually, well, that's going to help. I can't tell you how many people have come to us and they've always paid their bills on time, and magically that month they have a new collection or a new late payment because they didn't have them on auto pay. And so there's lots of little things like that that make a difference. And we'll tell you exactly what you qualify for. If you don't qualify, we'll tell you what you can do to qualify quickly with our credit restoration programs. And then usually we'll have the funding, in your bank account or available for use within about 2 weeks.
And going back, okay, let's go back to that same individual, 700 credit score, the high credit limit is $15,000 right now on a credit card in their name. But that same person hypothetically could go and start an LLC the same day, open an LLC, and let's say a couple days later, they come back to you, and all at once you can run a scenario because their personal credit's good. Even though it's a business credit card, they're still looking at your personal. You can run a scenario where you get them, 30, 40, 50 grand in their personal name, 50, 60,000 in the business name, or vice versa, whatever it comes out to be. But that actually strategically makes a lot more sense if you're planning on doing this, because then you can you can start shifting some of the money, do balance transfers over into the business name, keeping your personal credit scores higher, right? I mean, so I kind of think personally that's like a kind of a really good way of going about it, like, because you're kind of attacking it 100% in the beginning versus, doing your personal first and then trying to do the business. I don't know. What's the kind of take on that? I mean, I'm sure there's some cons of doing it that way too, because the business entity is in season, but I don't know. Is there any input on that?
I like doing it that way personally. We always, give our clients the option and they can decide. Sometimes there's a time crunch and they just don't have the time to wait for the entity to get set up. Depending on the state that you're in, like sometimes those entities are 24 hours, so they can be really quick. But yeah, I always think it's good to get the business credit started now. And that means getting that entity set up and getting some business credit cards at 0% interest in the name of the business. And, if your business is brand new, maybe you're going to get, if you qualify for a total of 80,000, maybe the first 40 or 50 will be personal and the other 30 to 40 will be in the name of the business, but that's okay. That's a great start. And then you can use all those business first, max those out without any negative repercussions to your personal credit. And then if you start getting into the personal ones, you can use half of those up and still not have a lot of negative effects on your personal credit. But at the end of the day too, if you have to use the personal all the way, it's okay, as long as there's an exit strategy to then be able to pay them down with profits or refinance into the longer term mortgage.
That's some great advice. I think we've given a lot of information today. So I'm going to say we should, what I'd like to do is bring you back on in a month or two when you have time. And what I think would be really cool to do is take a deep dive and kind of do like a case study of kind of like from start to finish, like how you see the evolution, where maybe it's 2 or 3 entities that this person started, kind of a case study that you've personally dealt with a client that would be a goal for like somebody like myself. Like, okay, I've got a couple LLCs right now. Like, let's strategize some ways that we could really, and show examples of how you've done it. And then, where they started from and where, 2 years later, where they ended or where they're just beginning essentially. I think that would be interesting for people to see that what people can actually achieve by, following the systems.
Sounds great. Yeah, let's definitely plan on doing that. Case studies are good. Real life stories are good and practical. And that's definitely something we'd love to share.
Well, thank you so much for your time. I'm going to share all of your contact information in the show notes below this video. And then, so any kind of parting notes about business credit or entrepreneurship you want to leave with us?
I'll just say this, with your partner link, obviously working through Beau, we do have a special deal when you go through the link that'll be on, by this podcast, where you'll actually get a better deal. We waive all upfront underwriting and application fees to give you that free pre-approval. So there is definitely a big benefit, coming in through Beau's podcast, that I'll say. And in terms of entrepreneurship, I've read a lot of different books, gone to a lot of seminars. You and I have, met at a lot of these big seminars from entrepreneurs more successful than us. I've sponsored events with Grant Cardone, with Russell Brunson. And one thing I always like a new business owner or a new investor to kind of start out with is getting the right mindset. And I find that one of the books that really helps do that, for me, I remember before I read this book, I could never get my business to make over $1 million a year. After I read it, all of a sudden we went from $0 to $5 million in sales within 18 months. And it's the 10X rule by Grant Cardone. Maybe you've heard of it, but I love listening to that book on Audible. And I've recommended that book to a number of our clients to get the right mindset. And it's a growth mindset to where you stop focusing on the little things that don't matter and worrying about the problems, and you start focusing on solutions, bigger goals, 10X goals that even if you fall short on, you're still going to be way ahead of where you would be.
I love it. I love Grant Cardone. I'm a huge fan of Grant. I'm a huge fan of Ed Milet too. I like him.
That's a good guy.
Mindset stuff is key. Well, thanks again, everyone, and thanks for listening, and we'll see you on the next episode.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.